At a time when I entered energy, but within crisis, to the second annual held in the heart of Singapore. Over the next 3 days, not just discussing the challenges, we're diving deep into solutions, beginning with the technology and resources that are the way to a carbon neutral. This is where the leaders today shape the energy landscape of tomorrow. A gathering of minds ready to innovate and inspire. Together, we will discover paralleled investment opportunities, learn from the pioneers, and connect with like-minded professionals committed to make a difference. The future is just what happens next. It's what we create. Welcome to the second annual Tribeca Future-Facing Commodities Conference. Oh my, caught me, and I was talking to people. It's most unlike me. What this conference is all about, isn't it? Talking to people. Right, for those of you playing along at home at the moment, I think we've got 300 or 400 people online. Hello, welcome, lovely to have you. Now this is a very, very lucky. Well, the key to unlocking, we're not looking at, we'll be hearing from a company that holds that key to unlock capital for companies. The vanguard of transforming the industry by harnessing its ESG discussion, meeting the demands of investors' supply chain, but it's already seen him once today, is Jeames Strauss. Thanks very much for coming up. Did you enjoy the panel? Any key take-on there for you?
It was, to me, that was decarbonisation, then going back forward.
No, it's only going forward. Yeah, so we just have to, it's the innovation around it, isn't it, as we were talking about? It's the innovation.
Yeah, I was fascinated by both of those other parts in terms of what's going on behind the scenes. Yeah. You know, I just close out and try and get companies to get the, get the capital, which maybe is difficult to get, but these guys are really changing what's going on behind. And that huge investment to unlock the potential over the next 30 years. Yeah. So clearly back-end weighted because of all this money and development going on now. Yeah. But it's, it's happening.
I remember 3 or 4 years ago when we were just starting to talk about recycling batteries. And now it becomes something, and back then it was saying, if you're going to need to get into unlocking what happens in 7 years' time when those batteries are needing to be recycled. So
we just need to buy one of those cars out the front and then get some value for them.
I did the International Parking Conference and they were talking about those cars and the future of those cars and fleets, and talking about autonomous vehicles that we would just call up, so we wouldn't have to park. We would just we would just make an application, a car would come to us and meet us at the door. Imagine that, we wouldn't have had to worry about how we get here, wouldn't have to worry about getting range on it, just come up, grabbed you and then gone away. So everything is changing and transforming.
Long way from the UK to drive for those, still in one of them.
Oh, you'd be interested in what's happening. And please put your hands together for James and let's hear what he has to say. Thank you.
Thank you. So I think this will work. I haven't been instructed how to use it, so. Is it the green button? Oh, maybe. Oh, here we go. Okay. Okay, so moving into a new era. Thank you very much, everyone. I'm Jeames Strauss. I'm the founder and CEO of Digbee. And I really do believe moving into a new era with this. I really want to get 3 key points out over the course of the next 15 minutes. First of all, which maybe is a surprise to some, sustainable investing has not worked. There have been unintentional consequences, significant impact on this industry. But the second thing is one bit more hope. Finance is returning. And the third is finance returning a catch. And I want to give credit to a little Dr. Kelly that I've relied on here. She's the professor at Yale University and highlighted the fact The ESG investing or sustainable investing basically has had these unintentional consequences. Brown sectors pushed to the wall. But at the same time, many of these sectors are absolutely critical to today's environment. And if we continue, they will effectively operate that we know today. So in seeking performance, sustainability investing, which now equates to up to 60% in Europe, I think on average it's looking to be around about 35% of funds under management in the course of the next 2 years. They've all effectively been pushed. The green sectors have been pushed into the kind of premium valuation, cost of capital, to most of the rest of the polluters, effective in terms of valuation and cost of capital. This chart highlights the mining companies, of course, of the last 10 years or 15. Investing really started getting a significant fall off. CapEx to EBITDA with reasons for that, but it's probably not coincidental. That it related to the rise of sustainable finance and the reduction of the reduction of CapEx relative to EBITDA. These companies have been driven to cash flow, to driving for short-term profits. They've been driven to not investing. They have not been incentivized to make the investment required to move into this new era. What was worse was if you look at the results only a few weeks, 9%. And if we then begin to go the potential leverage with which, as opposed to really opens itself up. Typical Brown company, with lower quartile, reduce their emissions by 1%. That is a greater magnitude of carbon reduction than removing 100% of the carbon emissions from a green company of a similar scale. Green businesses are essential, but they are largely tech service businesses. They cannot get much greener. The brown sector has enormous leverage opportunity to impact change in this industry within sustainability and most specifically carbon reduction. At the same time, we're coming into the two major megatrends of the mining industry. The future of the energy transition and the geopolitical rebalancing of the supply chain. Now, these two megatrends won't create the bull off like a lot of people hope. Pull to bull market. What we need to understand, catch to effectively change that we already know to what effectively is, and it is my belief that where the mining industry already is, the ability is the opportunity to transform the trust and conviction and the confidence of this sector will change this industry. Already started, this industry is fully committed to being responsible. It's fully committed to net zero. It's fully committed, it is leading on its commitment to nature positive. And in addition to that, every company that is in this conference will fully understand that it already has a robust process globally around the world. Now, I've seen an 80% specialized capital over the last 15 years in the mining sector. The broadest part of the investment community does not want to be associated. They are scared. But the worry is, the opportunity is, that we could have 35% under management in 2 or 3 years. At the moment, this sector is in most of that investment. Moved so much of the capital, we are now, in my opinion, at the bottom. Because the way to address that affect the What can fill this? Now, if we go back into 2000s, the shale gas industry in North America, which was run by mums and pops, very much similar to the junior mining sector, had a relatively low valuation and was encouraged by the US government to get involved. The US government encouraged the private equity groups to get involved. They brought capital and structure to bear. They moved that sector into portfolios, which then got sold into the big cap oil companies. That turned into a $1 trillion industry as we know it today. In talking with a private equity group out of North America last year, exactly the thing is happening. Involved with regards to filling up the vacuum. In Ferrier, we can see here, is a French fund. There's a US-UK fund which is leading critical minerals. There has been significant investment, obviously, by China with regards to its critical minerals over 5 years. The private equity groups jump this with regards to Appian's new fund, Orion's new fund. There's an engine number. All of this is beginning to together. If you calculate this, we've got $14 billion of new money raised, plus a further $14 billion on the Saudi fund. That doubles to triples the amount of legacy capital inside this sector. It's not all been raised. It has not all been deployed. We're not feeling the impact of it yet. They will focus on critical minerals. It will focus on a relatively small portion of this sector initially. So as important to know where the generalist investors sit. They are not leaders. They are to get traction on this. We're beginning to get invested, and hopefully we begin to see some action of this where I would anticipate generalist investors to get involved. But we must all understand there is a connection to this with regards to sustainability. Practical business, it is now a practical business requisite to do ESG credentials in order to mitigational risk and enhance effectiveness. The cost of capital, the supply chain access. It affects operational, also reputational risk. Challenges that must be overcome in order to wave of new finance coming industry is significant. We must accept that operational performance has not been ideal in the last 15 years. We must embrace options to mitigate that risk. We must recognize that society has changed and that we must meet these challenges head on in order to give the confidence and trust for our license to operate, as well as to encourage new capital into the industry. We must listen to the finance industry and also the supply chain world so that the new data that we can provide effectively improves, mitigates the time that really leads with a positive cost of capital. Now, if I was a CEO of a mining company size, I would put sustainability on page 2. Why? Because you go into that meeting and you're looking for, or you're wanting to do due diligence process. The management team embraces sustainability, has it at front of mind, has reduced the risks ahead of it, and can effectively move into strategy of that meeting straight away, knowing that that's not going to be a fundamental issue. If I'm going into a supply discussion with an offtake agreement, I would want to make sure that they were fully aware. That is what is front and center of their mind, other than cost. Now, this is a scary chart. This was done actually for PDC in 2023. And what worried me is not so much that the mining sector has a very high cost of capital, but that it has a 400 basis point margin relative to, and it is that concern is a problem. As we heard from Tribune in the first presentation, the 16 years worth of permitting and approvals and everything. Sure, we understand these underlying structures to get mines into production. But that doesn't mean to say it must continue. There are opportunities to bring them, if we can get this non-financial out into the public domain, to be credible and for it to be credible, then we can begin to work permitting in parallel. We can begin to bring government and other stakeholders on board with us earlier on. We can bring the equity, we can start to begin to change the underlying equity structures. I'll jump on this. I think hiring is really important. We could talk all day about this. I think we've got to change the culture. We've got to change the narrative within the mining industry, and there's no reason why, if we didn't use the 1% story we had earlier, could effectively encourage new, younger people to look for jobs, to ensure that tech can be involved in the mining industry, to see themselves that has fundamentally changed in 20 years. There are exciting opportunities on this. To operate sustainably is common sense. To operate responsibly is a way to begin to change our narrative, begin to regain the trust that this industry has lost over 20 years. We can mitigate investors are looking for in order to deploy their capital. We can increase that access. We are at the smallest pool at the moment. The opportunity to transform this industry, if Asia is the future, mining is the power of that future. Of mining is the mining materials are the power of the future. We're not going to have a conference of as it is this. If we're going to achieve that, this is going to be 2 times bigger. That for mining companies, I think the great opportunity here is undeniable differentiation. We're beginning to see that in terms of the how the offtake agreement is being recognized. The landscape has changed. Capital is being mobilized. Is differentiation. It could be a nickel company. It could be an iron ore company. All of these companies outlay their credentials in a way that has not been. We need to embrace this change. Can win the heart of society. Last thing I just want to highlight is the head of ICMM, which is perhaps only talks for 27 companies. But he highlighted the other day that we are finally in a place where governments, customers, and even many NGOs are finally seeing the industry wanting to succeed for everybody's sake. And this is incredibly energizing. The companies that will win are the ones that can differentiate, finance head-on, and effectively go out and win. Thank you very much indeed.
Thank you. Next up, we have Basin Energy, a pure-play uranium exploration and development company, which focused on 3 highly prospective prospects: Millennium, Geeky, and Moorhouse in Canada's renowned Basin. Come on through, sir. Basin Energy's Mrs. Pete Moorhouse, please make him very the developments for all of these projects. Welcome, Peter.
Perfect. Thank you for the introduction. Great to be here. It's the first time in Singapore. What a fantastic conference and a great mix of people, both in the room and in the conference centre. We are one of the first of about a dozen uranium we're going to talk to you over the next 3 days. We're a pure-play uranium explorer. We're located. Of those dozen uranium companies you're going to hear from, you have a very different, compelling story to talk to you about. But about half of them have got assets in the Athabasca Basin in northern Canada. So part of my talk is going to be to run you through the basin story, but also run you through why so many companies are exploring in this part of the world. I'm not going to go through uranium macro. Scott mentioned it earlier this morning, and I'm sure you'll hang around for the uranium panel later today with Guy Keller. we're excited. This went to a phenomenal react period. We're over a decade of, and it's forming a macro which is pretty phenomenal. So take note of the space, take note of the consumer. Now, based on our disclaimer statement, please feel free to truth and chat to me about that. So we're a pure play uranium exploration company. We listed around 2 years ago on the ASX, ticker code BN. We're a small company, market cap around $14, $15 million. We're currently well funded. We did a cap raise a couple of months ago. At the end of last quarter, we had 3. We put another 3, so there's $6 million in the last quarter. We are actively drilling, and we're actively doing ground geophysics, and we're funded for exploration campaigns for the next few months for sure. We're going to talk about the Athabasca, but our projects are currently only located in the Athabasca Basin itself. This has been home to uranium mining for over 65 years. This has been a top 3 producer globally for 45 years, and it's home to the likes of the Cameco's and the Uranos. This is a phenomenal district, phenomenal deposits. A jurisdiction which is second to none. We have a framework in place which allows exploration, clear pathways to and also release value down the track. You have discovery. Jurisdictional for any commodity, especially for uranium. And I'll run you through the team. We have a background in uranium, both from a technical operations and commercial point of view. Now, the Athabasca Basin is shown on the screen behind you. I always like to compare this more for the Australian we have here. You know, in Australia, the biggest uranium opportunity is Jabiluka, 350 million pounds, about 0.4%, about so 0.5%, 350 million pounds. The biggest in the Athabasca being McArthur River, around 675 million pounds, but it's 17%. So the grades and the scale things are phenomenal, and that's why I explore here, and that's why when you find one of these, they are mined. Now, here, cross-section, or a timeline, if you have time against is a time period, and it shows you discoveries that we see in the basin since 1970. Point out, from an investor perspective, has released value for holders over exploration only. With that 2011 period, we still have this in the Athabasca, and the focus on the next day or two, so please listen to the story here. But this was a couple of exploration focused on more basement-style mineralization, $30 million market cap company when uranium price was sitting at a $1.5 billion company off the back of success. Sorts of returns that you can get with credible discoveries. Not just them, the work that the guys at ISO have done, 92 Energy as well, who now have just merging with Atha, who are here as well. Chat to them. Fantastic exploration successes. Base Lloyd as well, also here, and Alaska, our joint venture partner. You know, only a couple of weeks ago, Corey announced almost 17 meters at 13.7% uranium. This part of the world is phenomenal. So you're very lucky, guys. You've got some phenomenal explorers in the Athabasca who are all kicking goals at the moment, so please make sure you have a chat to them. Now, the basin story, what will be different for here, and I think a bit of a differentiator. When we were looking at projects sort of 3 years ago, we were looking for explorability. The key things that we believe we have in our Geeky project is shallow potential for basin-style mineralization. Now, the focus in the Athabasca has been looking at this geological impact on conformity. And the main model driver is yield to the contact, you drill just past it, and that's where most of the big discoveries have been found. There's been a push on basement-style mineralization post the Arrow discovery. Note Arrow here, some 200 meters past the conformity itself. But what does that mean to us? It means contact here is perhaps critical. The eastern side of the Athabasca here has the same fundamentals, has the same on it. So Basin has a new project, which is his footprint itself, nice and 200 meters. We went out a relatively early stage exploration. We did geophysics. We were looking for rock types and a mapping exercise, trying to really pin this geology story together as to how do you de-risk this as possible before drilling lots of meters. We did mag, we found big structures, we did EM, we found the right types, and then we did a first pass drill program. So this was last year, uranium before program, on the footstep of the world's biggest deposits with $1 million market cap company. Our 8 drill holes hit anomaly. So 8. Now they weren't all grade, but up to 0.25%. Thicker intervals of sort of 9 meters at a few hundred ppm. Proof that this system is carrying uranium. More excitingly, from a geological point of view and a technical explorer's point of view, is the structures and the alteration patterning. We're seeing basement structures, beautiful patterns, the right system, the right utilization. So we have had a focus on main prospect areas. Our Preston Lake were the 2 that we found the most. We did stop drilling. We still had an amount of money in the bank, but we said, right, how do we do this further, having proven a concept? We then we flew airborne gravity with the idea of trying to map where these alteration patterns had been most intensive. And from that, we picked out a series of targets Basin to our drilling and more regional. From that drilling, we'd mapped the right structures. We know what structures are carrying. We know what structures look to be fertile. So we'll look at overlapping results. That brings us to today. We're drilling at the moment. We've got a rig on the ground, and we're starting to systematically work through those targets and start to continue to build on this concept of the Eastern Atha being the home of the next discovery. Now, briefly, I'll mention our North Malay Marshall projects. So these are in the traditional style, unconforming. So a little deeper targets for 200 meters, 40 Ks from MacArthur River, or about 7 Ks from the Millennium deposit. A continuation of, that's the wrong slide, a continuing Millennium fault, which we believe is the host for the Millennium deposit, about 7 Ks to the north. We hit a geophysical anomaly which looks remarkably similar to what they see at Millennium. 2 million pounds, about 3.5% uranium. So quite a compelling target. Now, we're trying to do on site, trying to pick out the rock type, trying to pick out that structure before we go and drill the target. Nice tight cap structure, about 100 million shares in issue, as I mentioned. We're sitting with just over 6 at the end of last quarter with praise. And a team that are driving this. Myself, I'm a geologist, as you may be able to pick out. Uranium background, some 18, 19 years of uranium exploration around the world. Exploration manager is Odile Mofray, so she was formerly the project lead for Orano, running exploration programs in Saskatoon, Athabasca Basin experience. And Blake Steele, our chairman, so Blake formerly was the CEO of Azaga, Azaga being an ISR company with US focus, who was subsequently acquired by Encore Energy 2022 for $200 million. Between the phenomenal uranium knowledge, phenomenal uranium experience, and we're extremely well positioned to make the emerging macro in the uranium space. So I hope I tweaked. Please feel free to swing around the booth now.
Moorhouse. And watch this man as he comes up here. He's ridiculously over-skilled and talented. He has a Bachelor of Chemical Engineering, first class honours, a Bachelor of Commerce from the University of Sydney, a Masters of Applied Finance, and in his spare time, he also went back and got a CFA charter holdership. So that's impressive, Andrew, but the knowledge that we want from you today, the knowledge that you have acquired in your work world, especially in the North American uranium space, because he's put that to really good use in his role as MD of Global Uranium Enrichment. So let's hear what he are up to together. Please make him welcome.
Thank you for that introduction. My name's Andrew Ferrier. I'm the Managing Director of Global Uranium Enrichment. It's an ASX-listed company. We're obviously focused on building a uranium company, in particular in North America. So there's 4 or 5 key points I'm trying to get across over the next 5 to 10 minutes. It's a short presentation. But the key points are, we have all the money we need for the next 12 months to execute on our US. We have high quality projects, both in the US, mainly in Colorado and Utah. And we also have around 6 different projects in the Athabasca Basin, which into why people want to be in the Athabasca Basin. The next key point, our team. Team is really fundamental, especially in space, good people that work in the industry for a long time, just because of the savage nature of the cycle. We have a very experienced team of US professionals that work on projects. And the thing that sort of makes global uranium unique is our investment into the enrichment space. Enrichment is absolutely fundamental to the nuclear fuel cycle. We've invested in a company called Uranium, which is based in Australia. It's a chemical enrichment technology which is progressing there. I'm the largest shareholder and very excited about that opportunity. On top of all we're working on, you've got the fundamentals of the uranium space. I'm sure you're going to hear the uranium companies speak macro environment. It is fundamentally the industry has been in for the last 10 years. That means there's absolute supply deficit. The world has gone nuclear over the last 2 to 3 years. The build occurring across the world are going to mean that we're particularly focused in the US. The US is in a very interesting. Nuclear is still the biggest part of their energy. It's in there on the bottom left-hand corner. There's effectively very little production of uranium coming out. That's left them very reliant on uranium, particularly rich uranium coming out of Russia. Talk a little bit more about it in a panel session coming up in an hour. But there's, announced recently $2.7 billion to go into the enrichment space, very close to banning Russian uranium. That's going to set companies like ourselves with projects in the US very well over the next couple of months as we continue to develop our projects. So what do we have? Our main asset is the Tallahassee projects. It's a JORC compliant resource of 50 million pounds today. It is a big project. It's one of the largest undeveloped projects, uranium projects in the US. We've got to be active on that project over the next 6 to 12 months. I'm being drilling it come the 1st of May. We'll take that drill work, accumulate with all the other existing data we have on the project and put out a scoping study later this year. On top of that, we've got our Maybell projects, which we also plan to drill, and then our pretty extensive portfolio. This is our Tallahassee project. It's in Colorado. We have, as I said, close to 50 million pound resource today. The entire district's 90 million pounds. It's for the US in that. It's a project with significant interest in the production. And as you can hear there by just how many black dots there are, there's 350,000 metres of drilling done on this project. We're blessed with all that time and cost would take to be tens of millions of years and years and years. The last 12 to 18 months, we've pulled this project together. It's in place. We'll be doing a small core program come May this year. We just need some additional fresh core to do test work. We don't need to make the project bigger. It's got cracks already. We're not drilling a few more pounds here and there. Just need a bit more met test work. So that's a pretty exciting deposit for us. Obviously one we pretty quickly advance over the next 6 to 12 months. This is our Maybell uranium project. It's also in Colorado. We picked up this project ourselves over the last 12 to 18 months, effectively staked it, and through data acquisitions have been able to gather a huge amount of data on the projects. As you can hopefully see there again, if you look at the northern part of Maybell, each one of those dots, which is actually hard to see, is a drill hole, right? We've now digitized all that data to taking this produced over 5 million pounds of uranium at good grades, 1300 ppm. It was a heap leach facility. We know it's amenable to leaching. At a very high level exploration on that project, it was conservative relative to our exploration targets. It was for sort of 15 million pounds of uranium, just the near surface uranium, basically the sit between existing pits that exist at Maybell. So it was very, we're going to July, August this year, we're going to have a pretty good progress basically to convert that exploration target into a resource. Most companies in the US development stage projects are trading at roughly US dollar per pound. We can see our valuation going up 3 to times as we sort of grab towards that number. So at Maybell, we're talking about getting a resource there of 5 pounds. You can see how much it can achieve for us. Then on top of that, we have in the Athabasca. Similar to what Basin was saying, we were looking for projects which had a real chance of exploration. So you can see all these projects are on the Basin. We're looking for basement deposits. Our key project that we've been working on is our Newnham Lake and Perch projects, which you can see up there on the top right or the northeast of the basin. We did a whole bunch of airborne work about months ago. That project has a permit on it. We're sort of weighing up exactly what the next steps are with the entire portfolio, but in particular Newnham and Perch. There's a lot of interest in the Athabasca at the moment. The uranium price has also gone up. The whole basin seems like it's entirely staked at this point in time. So there's a lot of interest, and we're just working through that at the moment. But what we have is about 60,000 hectares of projects in the Athabasca Basin, which could easily be a standalone ASX company at this point in time. On top of that, the sort of third to the stool, and easily the most potential upside is our Uberian investment. We made this investment 12 months. Uberian is different how enrichment is currently done through centrifuges. It's different to a well-known other ASX. It's a company called Silex, which has a laser technology. Uberian has a chemical enrichment technology, has some pretty unique characteristics, a big advantage moving forward. The world needs more enrichment capacity. The US at the moment is completely reliant, as I said, on Russian enriched uranium coming in. They're going to be throwing a lot of money at building out their domestic capabilities on this front. And Uberian stands in a great position to take advantage of that moving forward. Here's our corporate overview. As I bank today, we've got a map of $30 million, which makes sense for the projects we have. But I think at this stage, we're well funded. We've got a very clear game plan for both our Tallahassee projects and Maybell projects in Colorado. We have the money to drill them to complete the scoping studies. So we'll see pretty rapid, the share price being rewarded for shareholders over the next 3 to 6 months, or even shorter that when we get out the news flow of these programs. The team, absolutely fundamental. The two probably key guys, you've got myself and Fabrizio as the chairman, but the two guys in the US, it's Tim Brown and Jim Villeneuve. Jim and I have worked together for around 15 years in other ventures in the US. He permitted in the US and makes it one of the people have actually. So we know what we're doing from a permitting perspective, which is incredibly important in the US, and we know how to de-risk and value to these projects. That's the story. You sort of get the key points. We have the money we need to do what we want to do. We know what we're doing in the US. We're going to be aggressive. We're going to want to grow. We're going to want bigger. Have the Athabasca story and the Uberian story on top of that. So we're jam-packed full of assets. And it's going to be a pretty interesting 3 to 6 months. Thank you.
The most we on 1, 2, 3. Oh, that I didn't want him to speak. That's very impressive wrap up. I'm impressed with that, Andrew. Very good, buddy. All right, where's my next fellow when he comes up here? Now he cut his teeth. Exploration geologist both in Canada and Australia, correct? Got a little problem there, did a little affliction for the yellow cake. Yes. He's been very passionate his whole career doing amazing things, leading teams to do quite amazing things as well. You can go out to the booth this long and you have 10 minutes. Hey, he's going to address us in his role as, would you please welcome Troy Boisjoli.
Hey, when we're talking about Atha today, we're really talking about 3 companies. We're talking about Atha Energy, talking about 92 Energy, and we're talking about uranium. The 92 Energy, Latitude Uranium, where we announced a 3-way transaction as of December 7th, 2023. Those transactions right now are in the process of closing, consolidating into one company, which I guess just briefly on this disclaimer, happy to chat about that at our booth. When you look at this companies now on a pro forma basis once everything closes. The rationale behind the transaction, what we have executed on in terms of a growth plan and strategy, is building a uranium exploration company focused in Canada in the 3 best uranium jurisdictions in Canada that really unmatched exploration potential and exploration torque within one company. And that comes through a dominant land position, the largest exploration position in the Athabasca Basin, the largest exploration position in the Thelon Basin, and the largest land position in the mineral belt, which is in Labrador. Beyond the land position, we also have an advanced stage, or a series of advanced stage projects. In terms of exploration stage, we have a post-discovery project that came in through 90, and that's a GMZ project at the Atha. The Angulac project, which was the LAC 50 deposit, pound deposit at an average grade of 0.69%, resource just across the Saskatchewan border and on the Thelon Basin. You know, as a number of companies have talked about here today, you know, funding capital, access to capital markets on our exploration is a key component and a core component. At the time when we announced the transactions with 92 Energy and with LUR, we also did a concurrent capital raise. At that point in time would have had us with a balance sheet of around $65 million, which clearly fully funds the entirety of our exploration program through 2024 and beyond. Team, we've heard that theme here. The team is absolutely critical in the uranium space as other sectors to be able to successfully execute on growth strategies and plans in the exploration space in particular. The team that we've amassed at Atha, you know, it's self-evident in terms of the capital strength of the deal, but from a technical individuals that spent, you know, decades in the uranium space in prime Canada around Tier 1 assets. Corporation, both from an exploration context, moved to operations, or as the chief geologist at Eagle Point, one of their operating. From there, had the opportunity to join NextGen Energy in the role of vice president, project development, operations, exploration, and community. Exploration within Atha, Crevering, again, their experience set was just at Cigar Lake when Cameco Cigar Lake into production. So you go down to technical experience within our organization, and it's deep, and it primarily revolves around Tier 1 assets within the Athabasca Basin. Now, probably a few more slides than we have time for here. On the transactions, key points for this. Hey, we're happy to have the vote take place yesterday. Shareholder vote with 92 Energy passed with resound. That transaction is in early. Then we'll have both LUR, D2E fully consolidated Atha, and have us in a position to be able to execute our exploration strategy and continue with our growth strategy in 2024. Now, just a bit on the scope and scale of the company that we're looking here. So on a pro forma base, indicative market cap, I'll say with Atha trading in and around, which was the acquisition price, was paid cap in and around the $270 million range, you know, obviously dependent on the time when we're, the share price of the day. Now, getting into a bit more detail, build up of the Athabasca Basin on base in Central Mineral Belt in Labrador. 7.1 million acres of exploration property, Athabasca Basin, Thelon Basin, CMB. We have a carried interest. This is probably a differentiator and a unique aspect within Atha Energy. We have a carried interest, which is a 10% carried interest in a significant percentage of NextGen Energy's exploration portfolio, as well as 2 projects within ISO Energy's portfolio. I'll get into that in a bit more detail here later in the presentation. We have a discovery project that we're in the process of acquiring or have acquired energy. That's the GMZ project, right on the east of the Athabasca Basin under thin cover project that was or deposit just discovered a couple of years ago. It's had limited drilling into it, significant upside exposures in continuing to advance that project. Angulac project in just across the border, make this pointer work. Angulac project there, 43 million of 0.69, which is one of the high resources outside of the Athabasca Basin. So when you look at the build-up exploration assets, it's really about maximizing the amount of exploration torque within one investment opportunity. And that comes through a series, the largest early stage, package within the Canadian uranium, right through more advanced projects, post-discovery projects, resources that we intend to across the board. We're making plans, we're making operations to be able to get in black and significantly advance this project in terms of the growth potential. There's 43 million pounds there, as I had mentioned, at 0.69%. The reason we bought this project, the reason we bought Latitude Uranium was for this project. When evaluating this project, I look at a few different things. You look at the growth potential that we believe exists here, and it's significant from our perspective. I've spent the better part of 20 years advancing and developing basement-hosted uranium deposits. Had the opportunity to take a team into Cameco's Eagle Point deposit at the point in time when it had been mined for 25 years, had 10,000 drill holes into it, and over the course of years we added 50 million pounds to that. Then from there had the opportunity to join NextGen Energy, grew that project from 200 pounds up to 336 million. So the team that we have has a very unique view on the controlled basement-hosted uranium mineralization, and through that lens, the potential here in terms of growth and scale of the mineralization within the Lac 50 as being material. And that's based off the geologic target. A step further, and you look over time. The major here was at 14 million pounds. 1 year of drilling increased that resource to 27 million to 43 million pounds. So it's still a steep part of that resource growth curve. Technical targets that we see in our plan for this year is going to be investing in order to grow the scope and scale of this resource and advance it forwardly within this cycle. Gemini project. I think Siobhan, the managing director of 92 Energy, is back of the room here. She made a discovery a couple years ago, very eastern edge of the basement-hosted uranium system. And when we were evaluating this project, the one thing that was striking to me when walking through the core, when doing the due diligence, is the similarities between the GMZ project and the mineralization, the structure, the alteration, the scale of the alteration, the similarity between this system and the Rabbit Lake trend. There are very few of these basement-hosted uranium systems within the Athabasca Basin. The two most prolific, in my mind, would be the Rabbit Lake corridor and the Patterson Lake corridor. In our view, the GMZ project is a direct analog to being right here within the Rabbit Lake trend. And so what that leads us into our strategy then in 2024, which is going to be two-pronged. It's going to be to advance the scope and GMZ zone through expanding at depth, through expanding on, and significant opportunity to continue exploration, fertile basement core completely untested. And that's these basement-hosted systems occur. You have multiple deposits along a fertile basement host, and we intend to exploit that throughout the course of 2024. Now, largest land position in the Athabasca Basin by a long shot. 3.8 million acres across every past producing, current producing, emerging producing jurisdiction in the Athabasca Basin. Now, what we did over the course of 2023 is we invested in advancing and we invested in the largest ever multi-platform survey across the basin with the whole objective of applying a systematic approach to exploring the largest land position in the best jurisdiction in the world and defining the high probability, highest priority targets amongst that land position, and then being in the very unique position of being able to test those targets first. At a certain stage, exploration is fundamentally a business of probability. And when you have a land uranium jurisdiction in the world, you know, that probability increases. And then that lends itself exploration at scale approach. We do have the ability to execute on this work at scale. We have them to be able to do it, and we've got the technical team to be able to do it. We are building up an extremely robust and large pipeline of high priority, high probability exploration targets throughout the course of the entire basin. Now, what that lends itself to, you think about what we're doing in 2024, Angulac, advanced stage project in Dorsch, pounds in the ground. We're going to be investing heavily there. GMZ, post-discovery project, discovery stage project, eastern edge of the Atha Basin. We're going to be investing in highest priority targets, and again, that we can within. I'm getting short on time here. It was once part of the Atha Basin. Geologically, these things were connected. It is a fertile uranium, a RIC project there, which is about 130 million uranium mineralization. There's discoveries in the area. The one thing that has not been tested in this area is high-grade unconformity associated mineralization, where you follow these fertile trends underneath sandstone cover. The same process that's at play in the Athabasca Basin are at play in the Thelon Basin. In our view, the Thelon Basin is analogous to the Athabasca Basin circa 1970, before the significant exploration expenditure occurred in between Key Lake and Rabbit Lake. Carried interest. Atha also has, through how the assets came into the company, a carried interest in a portion of NextGen Energy and ISO Energy's exploration portfolio. So that's a carried interest right through to a bankable feasibility stage, at which point it becomes participatory or converts to an NSR. So I'll just maybe here, so I'll wrap it up quickly. What Atha represents is a growth story in the uranium space. That grows through investing in the asset base, which is the largest in the exploration sector. It comes through to NextGen Energy through a carried in and all opportunities, all of which we will to execute on moving forward.
Behind me, listen to these headlines. Because the machine works, Big Sandy, halfway to production, looking even. The headlines that you will have seen in numerous publications following fortunes of our next up on stage. All you people are slowly behind me. Off you go. This is Arizona Lithium. This is Paul Lloyd. He is the MD, and he's going to share to the future for Arizona.
Thank you for that introduction. Now, and talk about lithium rather than uranium. And but we are going to stick to a similar area. So one of our major projects is in Saskatchewan, and those last presenters were talking about the Athabasca Basin, and that is in Saskatchewan. That's way north, and we're very way south on the US border, but very interesting hookup. The mission for Arizona Lithium is effectively to become the world's first oil field brine producer. And I'll explain that further, but it's a new area for lithium production, and it's something that we're very excited about, and we're going to lead that change in the industry. We are an ASX listed company, and we're all listed on the OTCQB. We have a market capitalisation of $100 million, and we have $22 million in the bank. The reason why we have that sort of market capitalisation, which has come down significantly as the lithium price reduced last year, you will note that that's starting to, and I'll let people like Mr. Lithium, Joe Lau, talk about forecasts in there. I won't go near that, but I will try to tell you about our projects. That we've two projects are in Saskatchewan, Canada, lithium brine project, larger land holding of 50,000 acres, It has a very large resource on that project. The reason why we can have resource on that project is because it's an oil and gas producing region, a very historic 60 to 70 years of oil and gas production in that area. So a lot of reference points from oil wells that have been drilled in that area. That will be a massive advantage as we develop these projects up, particularly the Prairie project, because all the environmental applications, the pumping of the material back in the ground has been done by all the oil and gas people. In addition, we have all the infrastructure we need to put this project into production. Rail lines, we have gas, we have labour, skilled labour that's used to doing oil and gas work, something very similar. Very excited to be just of the US Big Sandy project, and that is Arizona. Hence the name of the company, Arizona. And we've been working that project for about 8 years now. It's a sedimentary project, a lot of similarities to Lithium America's Atha project that recently attracted a $2.9 billion loan from the Department of Energy in the US. It's a large project, and continue to develop that project. We're just waiting on some drilling approvals, and we have a plan in place. But our short-term focus is definitely on the Prairie project and the ability of lithium brines in oil fields to produce a good quality lithium at a very good cost of production. So let's skip the slides in regards to the demand and supply for lithium. I think a lot of people in this room would understand that the EV revolution is going rapidly. I spent a time in North America, and EVs massive in Phoenix, Nevada, etc. There's no doubt that lithium is not. This slide shows basically we're operating in North America, and there are so many cell producers that have commenced construction, and they have very little supplies of lithium and other battery commodities. I think the cent lithium has come off or reduced significantly. I think that's a bit overdone by the retail market, and we are seeing people in the industry very interested in our lithium, and batteries are massive, and the future is very for lithium. So, as I mentioned, we are in Canada, in the province of Saskatchewan. It's a very exciting area to be in, oil and gas producing region, and as you heard from presenters, very uranium spotlight at them. So, permitting of that project is very efficient as compared to the US, where we're done in Arizona. The Biden administration is not exactly low mining at the moment. So we have pivoted to our Prairie project, and we've gone to an area where we are getting a lot of government assistance and a lot of cooperation in regards to permitting. So in detail, the 6.3 million tonnes of lithium carbonate at the Prairie project sits in an area where surface. The oil has been extracted from, we are going deeper than the oil and gas people. Out at site about 6 weeks ago on the first cleared, and in every direction that I looked, I saw oil and gas facilities, either drilling assets. So again, I mentioned there's all the infrastructure into production, all the stakeholders understanding, and the farms cooperative. They basically want to replace their oil and gas revenues with lithium revenues. This is an area that does hold a huge amount of lithium. The 6.3 million tonnes, you put that into perspective, the demand for lithium last year was about 1 million tonnes. So we still haven't drilled this project out, and We will put this into production and then find more resource. This slide basically just talks about the quality of our resource, and that is because we had so many reference points from previous drilling of oil and gas wells. We don't see a lot of risk in the, and then we look at how we're going to produce the material. We talk about is how consistent the resource is. We're very happy with the resource. So we want to use what's called lithium extraction. It's filtering the lithium brine, so just basically salty water 1,400 metres down. We bring it to surface, we pass it through the filter, which we call direct lithium extraction, and we then send the material back to a saltwater disposal well. So it's sort of similar in nature, but the benefit of direct lithium extraction to a project like this is fold. One, it increases of your lithium. Also, it purifies the lithium. It rejects all the impurities. Those impurities cause issues for further downstream processing. So we tested our lithium and put a pilot into production more recently. We haven't announced final results. We are about to. And this slide shows that pad that I was standing on. This project is so advanced that we've cut the first pad in and we'll be commencing drilling in late May, early June to start production from this project. I've got a little slide here about direct lithium extraction. We go through that and I'll tell you how simple this process really is and how it will change the lithium industry forever. On the left there you have the production wells and the saltwater disposal wells. They're just basically commercials where you're extracting large to the DLE facility middle there, and that's what I was previously in regards to material. Then upgrade that material. It then goes to a CFRO where it's upgraded further, and then the final stage is we add soda ash, and we do use a bit of energy at that stage, and we produce a lithium carbonate to commercial grade quantity. For example, this schematic will be at every wellhead that you saw from the previous slide. So this project will be implemented on a modular basis. Each wellhead will produce about 2,000 LCE per annum, and we will be commencing the production from that wellhead in 2025. We want to be the first company to become a lithium brine in an oil field. And we have a very competition from a very large ExxonMobil. Have acquired 110,000 acres. We have 190,000 acres. They have it in the Smackover Formation in Arkansas in the US. They'll be utilising existing infrastructure, and they are going hard at lithium brine industry in North America. North America doesn't have a lot of production of lithium, and it's a concern of the Biden administration, and I'm sure it will be the concern of the next administration, at either Biden or Trump. And we are well positioned to obtain government funding. Even though we're in Canada, we will still receive US government assistance putting this project into production. So that is as simple as lithium brine production from an oil field can be. And as soon as someone commercially applies this technology, you will find that there will be a massive increase in companies that are in this space. There's a few on the ASX, there's a few listed in the US, mainly around the Smackover Formation in Arkansas, and I wouldn't be surprised if there's a little bit of M&A activity in this space in the future as the other oil and gas companies start to enter this industry. And it's very obvious why they're entering the industry. As a hydrocarbon producer, you are pumping a lot of material to surface, you're filtering that material and you're re-injecting. So for example, they are extracting the gas and the oil from that brine material. We will be extracting lithium from that material from a different, so like ExxonMobil has regards to what they be applied to the lithium brine industry oil field. So it's not just Exxon, it's Occidental, a large number of other companies that we're talking to. All those big US majors are to be in this space as possible and get into production. This slide shows you a little bit of what we obviously discussed in regards to our first lithium carbonate. The first module consists of 3 separate pads. And yes, there's a lot of drilling, but there's a lot of experienced contractors in this area. And we will commence that drilling late May and go through for the balance of the drilling suction wells and saltwater disposal wells. This is basically a picture of, thank you, the pilot plant production that we had at operation in Regina. So we produced 20,000 litres of lithium, not lithium brine, and we put that through the filtration system to increase the concentration of lithium and also to reject the impurities. And the results from testing were far beyond expectations. So we're very excited about that, and we're very excited to get into commercial scale production next year. I won't talk too much about our PFS. That's a public document. We put that at the end of the year. We are going straight from PFS into production, and we will be doing that next year. This is about the financial sensitivities. This is a very operation produced from direct lithium extract. No doubt about the fact that we're bottom quartile of costs for lithium industry, and that's where you'll be for any commodity. So we're very happy to be in that place. I'll really quickly touch on the Big Sandy if I've got, no, we can talk about the Big Sandy later. If you want to come back to and have further discussion, I'm just near the meeting room number 2, back of the booths. So thanks very much for your time. Sorry about that.
You've got 15 seconds, but I reckon you want to lead in wanting more. You want them to come out and have a chin wag with you, because Big Sandy. Go and have a chat with him about one, everyone. Right, Chalice, thank you, sir. Next up on stage, Alex Dorsch is their MD. Now, the company's Goinville and Copper Platinum Group Element Pro 2A has made a fair progress recently. Resource drilling has significantly expanded the project, and this is going to be particularly good for Chalice, so we're interested in your reasoning and what you've got planned. Like Alex, very welcome, everyone.
Thanks, everyone. Great to be aboard for the second time. Chalice Mining is a very high-profile explorer in Western Australia, and we've got hold of one of the most exciting and I guess critical minerals province anywhere in the world. The usual forward-looking statements and disclosures, these are available or on the ASX platform if you want to read them in full. What's Chalice? We own critical minerals deposits and really we're unlocking a new, a really previously understood of Western Australia's geology. We're in a very strong financial position, about 112 in cash as of the end of last year. That means we dilute shareholders for percent ownership of our is the largest palladium in the Western world. It's also Western world, so it's a very, very interesting polymetallic critical project, 16 million ounce EGMs. 60,000 tonnes of nickel and 20,000 tonnes of copper, 83,000 tonnes of cobalt in the ground. At the moment is trading, I guess, reflecting the depressed nickel and palladium price environment. Somewhat bizarre that a project like this is valued upon spot prices, but yet here we are, given that we're not producing anything. We've spent 180 million on this project over the last 4 years since our geologist made this discovery in 2020. And we've spent that money very wisely, drilling out the very large resource, doing test work, engineering studies, also acquiring the underlying and surrounding farms. So we own 24 kilometres of farmland, which de-risks the permit of building a project in this area. So currently about 330 million Australian dollars. So you're not buying much more than what we've actually spent on this to date. So the leverage here to recovery in price of particular palladium and nickel is against us actually finding something else in the surrounding 10,000 square kilometres of untouched geology in Australia. So the project itself is going to be the lowest cost P mine in the Western world. It's going to be second quartile due to its very attractive base metal byproducts. It's going to be simple, open cut, sulfate of the nickel mines. This is a sulfide mine. It's a significantly lower carbon intensity, lower environmental impact, and a much more competitive one in terms of cost profile. It's going to have obviously IRA compliant metals that are a very, very big deal because the IRA is going to drive a Western premium for Western products. It's 70 from Perth, the project. Very, very close to world-class in Perth. We've got a pre-feasibility study underway at the moment. The initial focus of that being, I guess, how might we high grade and maximise return on investment in the initial phase of developing this world-class resource. So whilst we do that, we've got about 25 geologists combing over the 9,500 square kilometres that surround the new discovery. And we shouldn't forget that there's potential here to find other things other than nickel sulfides. There's a very, very large gold copper mine called Boddington in our backyard, a very, very large and world-class lithium mine called Greenbushes, and as well as obviously Gonville, which is 30 million ounce contained palladium equivalent deposit. The board and management team of Chalice, we've got a record of find very, very small amount of money to find Gonville in 2020, about 70,000 Australian dollars. We've got 112 million cash, and we can do that many months here to hopefully multiple other discoveries in the province. So really it is a strategic, the supply of palladium is really focused on Indonesia, South Africa, and that is a huge problem for the world because without having shit with those countries, have the potential for those countries, the supply of those has all the governments in the Western world very worried. So that's why they've classified palladium, nickel, cobalt as critical minerals. They've also classified copper as critical in some cases. And what's happened is the Western world has had a capex holiday. It's also had a discovery holiday. And meanwhile, China and other countries like Russia have been finding and developing metals mines. And that is a huge problem. And the US Inflation Reduction Act is trying to counter. At the moment, palladium's in a very weird position because a lot of people perceive it as a metal that's not required for the energy transition. At the moment, the palladium spot price is at about the 5th percentile of the cost, where that vertical red line is in the middle. That means that those mines on the right-hand side of that line, the supply is decreased as that price goes down, but yet people are actually buying hybrid vehicles require a palladium-based catalytic converter. So demand is robust. So the biggest producer actually has negative cash costs, that's Russia, nor nickel. They're decreasing their production of those metals by 12% year on year. They're having huge issues actually obtaining supply. And all the South Africans, you've been in South Africa recently, know how challenging it is in South Africa from an electricity grid. Socially, it is a very, very challenging operate right now. So, laying off thousands due to this. You're going to sit, as it says there, a little blue and orange bar to sit in the second quartile. You're going to outcompete the seconds and all those right of us. Why should you care about palladium? It's become a very, very contrarian metal opportunity. And the reason you should care is because hybrid electric vehicles are basically the best of both worlds solution. At the moment, hybrids are growing. The actual construction, manufacturing of hybrids and sales are growing far, far quicker than purely battery electric vehicles. And that reflects that they're lower cost, they're longer range, and they don't require the charging infrastructure that pure battery electric vehicles have. So at the moment, in February 2024 versus 3, battery electric sales down globally, while hybrid vehicles went up %. That's telling you right now. So you need to really read between the lines, because here is lumping together battery and hybrids as vehicles. So there's a perception that palladium demand is going to be destroyed by electrification, and that is absolutely not true based on the current trends, because those plug-in hybrids, like all hybrids and all internal combustion vehicles, they need a palladium catalytic converter. So why is that, etc., at these cyclical lows driven by a very large hedge fund short position? So the price is going to have to rebound, and where might you get to that rebound? Well, basically the only serious player in the Western world with a major palladium project. As you can see there's been a 41% growth as well in vehicle sales over 12 months, but a huge decrease in the palladium price, which just does not make sense. So really, there's a lot of reasons why the palladium price will go up. And what are we doing on our side? Obviously, like I said, we're recutting that high-grade project. So we're looking at our project from a lens of lower prices, so high-grade, more selective mining operations. We're updating a scoping study in the second quarter of a high-grade open pit and starter project. We're also in advancements to secure an asset-level strategic partner for our project that we expect to resolve in the coming weeks. So it's just outside of Perth here. Those who know this part of the world, Perth's got fantastic infrastructure, a fantastic advanced, workforce. We are going to be on the outskirts of Perth using the Perth-based workforce. Very, very large resource, as I mentioned, is a strategically sized, long life project, world-class in many aspects. We haven't yet, I guess, our evaluation of how this project may be developed. Is it going to be open pit, combination of open pit and underground? And like I said, we're attracting a strategic partner to this bit because of its inherent qualities. So if you look through the current environment, which is incredibly weak, where might you go for high-quality resource project? I'd suggest right at the top of the list. What's coming up in the next 6 said partnering process, start a development case, and then really, I guess we're shortly about to begin the permitting and approvals phase. As it says there, we're about to refer the project to both state and federal governments for assessment. We believe all of those things are going to be basically pointing towards a late 2026 investment decision to build ahead of first production later in the decade, likely 2020 or 2029. So importantly, throughout all of that, we are fully funded all the way through to that late 2026 FID. So you don't need to worry about us diluting holders before we get this resource because of the amount it holds and the metals mix. Which at currently open pit operation, I guess progress open pit mining down to depths of 400 metres below surface. We know the resource extends down to at least 800 metres. And we know mineralisation extends to about 1,200 metres. So there's never going to be a shortage of resource on this type of project. What's critical is really working out where is the optimal starting point in terms of cut-off grade and where do the economics sort of trade off. And so that's what we're working on at the moment is as a starter case, looking at much higher grade in the initial instance. And we're, as I said, about to report the resource to reflect that selective mine approach. And then I guess it's been known for some time that the resource on the right-hand side of that figure, that occupies just a small part of a 30-kilometre long belt. And that geology that hosts that resource, we know that it extends a full 30 kilometres. We've got indications of sulphide mineralisation over that full extent. But as yet, we haven't really drilled out the other remaining 28 kilometres. So there's a huge opportunity there. We've done the northern end of the complex on the left-hand side, and we've also done a very program basically testing for indications of that geology throughout the entire life. So we will know shortly, I guess, where to now focus in exploration efforts in the state forest area immediately north of the resource. But outside of that, to argue now, we've just as good, if not better, exploration targets on the surrounding 9,500 square kilometres outside of I guess, the immediate resource area. We know, we can see Gonville is going to be a project that's going to be a mine, and that, I guess, decreases the hurdle on near field discoveries. But more importantly here, there are all sorts of different styles of mineralisation in a very good part of WA. So probably a 1,200 kilometre long of the western edge of the Gun Craton under licence, and Craton margins is where you go for the big giant nickel copper PGE discoveries. So things like Voie, they're found on the margin of these cratons. So we've got several areas of active exploration at the moment. Probably the most exciting is the area immediately east of Gonville at the northern JV. And we've got 20 targets there to go and progressively test over the course of the next coming months. So a lot of upside here beyond what you can sort of see tangible in terms of resource. So I've already mentioned the catalyst, but obviously this is a very much an opportunity at current levels, given where spot prices are. We are not producing any metal at low spot prices, and yet that's how the project is being valued. So please come and chat to us if you'd like to learn a bit more.
Dan, thank you, sir. All right, consistent, thick. Something we'd like to be described at, but that's the word for the deposit in Brazil. Continues to deliver consistent, thick spodumene intersections. How are you? Tired? Good to see you, Christopher Gale. You're looking slightly healthy. Why? It's very good. Yeah, I have. Go and sit over there at your microphone. I'll to 5 minutes off you. Now, he's been very busy today. If you've been following what's happening with them in just last 24 hours, a couple of really exciting announcements. I'll let you go into more about that. These guys 2023, and that was from the growing interest in Brazilian spodumene industry, which is pretty much the biggest one, the biggest hard rock one out of Australia. Christopher, welcome. I'm glad we found. Very welcome, everyone. Let's have a listen.
Thanks, Chrissy. Thanks, everyone. It's good to just going to give you the Latin story. Yes, we did have a great announcement this morning. As we further infill drill on our project, we're getting massive grades up to 1.8%. So it's been a wonderful project. We've been very lucky that we've created that luck. Just a little bit on board and management myself. I've been running Latin for 15 years now. Dave Valensky, non-exec chairman, and Lloyd Brent's a young guy out of Melbourne. Pablo represents our largest shareholder, out of our team. But Peter Oliver is the key here. Peter's just moved to Executive Director. He's chairman of our division, Greenbushes, for 12 years, the world's largest, most profitable lithium. Then went across to Chief for a couple of years and joined us about 18 months. It's a key rotation. That's a key theme we've got. That we're turning from exploration into a developer, and we've built the development to take this into production. And here's some of the new members of our management team. Aaron joined about a month ago as Chief Operating Officer. Aaron worked at Resources for just over 5 as their Executive Chief of Operations. He built out Marion Lithium Mine, Chris Ellis, and then put him into running and building Marion. So we're very, very fortunate to get hold of Aaron to help develop and build our mine. Tony Greenaway was originally Operation Manager. He now is VP of Operations. All our test work gets in. Mike Drake joined months ago, 15-year veteran. He's worked at Belo Horizonte. We have an fellow, which is a great mining destination. Mike is building an owner's team now, a number of consultants, including SGS, Minsol, who are Greenbushes processing engineer. Worley were recently awarded the contract for engineer. Mitch Thomas, the CFO with Moorhouse, our business development manager in Brazil. So if you look at this team, a lot of people ask, how are you going to go from exploration to development to production? You're looking at it right there. A little bit now on the project itself. Minas is probably the best jurisdiction, not only in Brazil, but South America for mining. 300 operating mines. Our actual plant will be run by hydropower at 3 cents a kilowatt. So we're very, very lucky to be in a very low-cost environment. Moorhouse is the second largest port in Brazil. Water, dry stack tailings is a total ESG compliant, sustainable mine. And so we're exceptionally lucky being in a wonderful jurisdiction of Minas Gerais, Brazil. On the resource itself, it's 90 million tonne, growing to 80 million this year, that will have a 100 million tonne resource. This is a tier 1 global lithium asset. This is a lithium deposit in Brazil. And for those people, it's one of the greatest mining countries in the world. This is significant. Why do we want 100 million tonne? Because we want to be a tier 1 global producer and become our tier 1 global producer is the ability to actually produce 100,000 tonnes of LCE, lithium carbon equivalent lithium per year. We believe that we need that 100 million tonne, 80 to 100 million tonne of 1.3%, to be able to reduce 850,000 tonnes of spodumene concentrate per year. That's what currently Pilbara Minerals are producing, 850,000 tonne, and their market cap is $12 billion. So a lot of hard work over the years, but this is as we proved today now, the further we drill, the way of geology, etc. So it's just been exceptional. Side view with the deposit itself. We have measured and indicated 41 million tonnes. We're infilling that at the moment, infill drilling that at the moment. We've got so that measured in the KFS, which we have planned in July, August. Tier 1 asset, great grade, and the thickness, 75% or 48 million tonne of the MRE is 5 metres of true thickness, but 39% is 24 million tonnes of 15 million tonne of true thickness. So the mining of this particular project is going to be relatively easy, and I'll go through the processing shortly because that is going to be even easier. Test work, we're once again, very fortunate to have a particular geology with our lithium and our spodumene that shows it's a very, this recovery rate of 93%. The recovery rate we're getting is acceptable. We're still getting we'll have our further test works, our bulk works coming out. This is a DMS plant, dense media separate plant in Lakefield in Canada, all our test work, run by grain spodumene, which means we have very little mica, very little iron, very little other type lithium, of mineral grade, exceptional clean product that we're actually producing. Gives you a snapshot of the mine itself. This will be all open down to about the stockpile on the right there, and then you'll see to the bottom of the left-hand diagram the actual mine, the actual plant itself. Very, very simple process. This will be full DMS, no flotation. Most of the mines here, in West, spodumene mines have flotation circuits. This is pure media separation, crushing, and just pushing our material through the action plant or the dense media separation side. Very simple flow sheet, very good grade material, and recovery rates are outstanding. This is going to be the next tier 1 lithium from a global. We are 4 kilometres from the substation, hydro substation. We're 12 kilometres from a dam, which we now have approval to take water from the dam. So it'll be 12, and as I said earlier, 500 kilometres from the largest bulk port in Brazil. The other great thing, we've ticked so many boxes in this operation. Too often when you build a project, you hit one of the key options most people hit, in second even here in Australia, is communities, is the government, getting a permitted side off. This is a picture of the pioneers of creating a project in Brazil that is now in production, and it's Governor Zema and his counterparts, where he launched Lithium Valley, Brazil, last year on NASDAQ. Ever since then, we're getting more and more attention across the globe because I actually think that this Lithium Valley and Minas Gerais, Brazil, will be the next lithium bowl. We published our PA in September of last year. Terrific 3.6 billion MPV, 132% IRR. Anyone to find any internal rate of return in any other business than lithium at the moment. 7-month payback. Base this pricing on $1,699 long term, and that was the average market fast markets over the next 12 years. So we've averaged that out. We're very comfortable with that number. We're seeing lithium prices increase. We believe there's still be a massive shortage of lithium in 26, 27 when we get. So space. The two key components of these numbers are the operating or sustaining cost of $506. We operate in a very, very low environment, and our cap $200. So the two key things for us here is to ensure that bringing into our DFS, those numbers are maintained, and we're very confident they will be as we put our DFS out in July, August. Our production front, we'll build a 0.6 million tonne front end for the crushing side, 1.5 million tonne run a month. The first 12 months, we'll get 100 to 250,000 tonnes per annum. That will increase to around 350 tonnes when we ramp that up the second year. But we will reach in stage 1, which has 2 phases, we will have 525,000 tonne concentrate come out tree. The DF will start, and numbers, by the way, the PA is based on a 27 million tonne indicated resource. The indicated resource will grow for the DFS, so we then want to bring stage 2 into the DFS, show us producing up around 850,000 tonnes per annum in year 5. Lead to when we think the pricing is going to occur with demand supply curve. A little bit of detail on the cap and funding, the main cost, so we have to move a bit of material that hump and start is 2 and 3. This will become cash creator for the shareholders. Operating costs, once again, is a very, compared to some peers and what they're operating at the moment, up around $1,000, $1,100. This means that even if the lithium price hovers around $800 to $1,000, we're still going to be making money. It's exceptionally important when we run into those peaks and troughs of lithium prices. Our timetable now, over the next 2 years, we're in a position where our PA has been published. We're currently, Macquarie Bank are currently running our offtake process. We had 20, that was, the expression of interest was closed on the 20th December, 27 in the data room. One, and that ranges from traders to chemical converters, battery manufacturers have really, it's just strange for me to watch the sentiment in lithium at the moment from the market level compared to the real world of supply and demand. Everyone is screaming for lithium in 26, 27 when they know that curve is going over, where we're going to see a lot in supply. Our environmental permit was lodged in December of last year, expecting that to be improved around the quarter of this year. A licence approval, our construction licence approval. The funding process for the $250 million has started. We expect that around 40% of that will come from offtake prepayments from our offtake partners. The rest will come from particularly, we've had several meetings with the Brazilian Development Bank, have just funded Sigma for $100 million for their stage 2 and their project. So we're really looking forward to talking with the Brazilian banks about getting our funding. Construction will start first quarter of next year. It will be completed first quarter of 26. Ramp up commissioning towards June 26, and will be full main-plate construction second half of 26. So only 2 years away, and this company will be in full production. So we're really excited with that. So overall, a sustainable low cost in the great field, and I think we're really going to be hitting that sweet spot when lithium prices grow again. And conventional DMS processing, dry stack to back grid, recycled water system, and sustainable, an absolute superior, and the electric the planet. This is our numbers out, $1 million in the bank, so we're funded through the financial investment which will be made in December. Numbers were 28 cents, and everyone suffered a lot through that. I suppose over the last 3 months, lithium prices dropping, we're down to 18 cents. So I think we're very good value, especially knowing that we're fully funded through the Fed. We have some great institutional shareholders on the list. We're actually admitting the global Morgan Stanley Global Small Cap Index in August, and on Monday last week we were admitted into the ASX 300. So we're very proud of that as well. So good company, great project, great team backing it to take it in production. Thank you very much.
Wow. If only we'd had this conference last week. Imagine that. That would have been a bit better fun. Still upside? He's drinking, he's been twisted. Thanks, Chris. All right. Leading us into our panel discussion today is an interesting one. James McKibben Consulting in it. He's only just made it here the skin of his teeth because he's in Melbourne watching car Formula One. Had a little bit of look at his talk. Now, the title of his talk, Drive to Survive, the Critical Minerals Grid. Now, his notes, the opening lines on this talk read, "One championship." Else written down there, we could be in trouble. So, and also I've got his dates confused because what's happening here in September? You don't know? You don't care? Maria Bay is closing down. I can't go there. I have to go and watch cars racing. I thought maybe he got his dates wrong, but no. Ships and the link to critical minerals. Without any further ado, let's see who makes the link and have a listen. Would you please make welcome, please, everyone, the wonderful James McKibben.
Thank you, Trin. So I wanted to thank the organiser. As you can tell from my talk, I'm a recent convert to the public series. We'll know that it provides a background, an overview of the strategy and all the behind-the-scenes workings. So I wanted to give a similar account of what happens in the mining industry, particularly as it relates to critical minerals. Really is just a light-hearted look at the parallels between the Formula One Championship and the critical minerals industry. As we know, they're both highly dynamic, competitive, and even innovative. In the second part, I then propose to have a look at some of the things that SRKs continue to ask for in undertaking a due diligence or a technical review by both financiers, by independent experts, by potential takeover parties as well. So in the hope that this might enable potential explorers or developers to see how that they can progress and drive towards production. So just as the driver is a key determinant of success on race day, geology is the ultimate driver of project success long term. In particular, the rock type determines the key physical and chemical characteristics in form, whether it's a sedimentous, brine, to deposit, the mineral that final product be produced, including metals, or whether we're talking, and also obviously waste products that are derived from production profile. In addition, the depth, geometry and orientation that determines how we're actually going to mine the cost structure, the ore complexity and the intertwining of different chemical species, how we're going to separate processing costs and also processing methods. Well, the location and remoteness will determine the infrastructure, transport costs, and also influence on the legal, social, environmental aspects associated with the project. In terms of engineering, whilst the chassis, the engineers are trying to down minimum weight, aerodynamics, drag, and ultimately leading to increased speed, so too project engineers are trying to the optimal settings for throughput, value, safety. So whilst engineering principles for a critical minerals project aren't significantly different from those that are associated with more traditional mining methods, we do see that there's a greater propensity for different or new age non-invasive techniques such as in-situ for your rare earths. We're also seeing that in order to be able to meet the objectives required to meet the metals demand going forward, greater desire to move mining techniques, greater depths that are also required. And this presents significant technical and operational challenges. In terms of processing, this is the engine that drives the successful outcomes. As in a car, we're trying to determine whether we're wanting acceleration or straight line speed. A key consideration from a processing perspective is how we're trying to position ourselves on the value curve, whether it's an upstream, downstream position. Novel flow sheets or complex flow sheets associated with critical minerals. This area is also of particular interest to financiers, given the impact on potential recovery, costs of production, and ultimately the price able to be achieved for the product. Also of note is the fact that many critical minerals are unlike traditional markets in that there is no established benchmark price, and pricing is determined customer-specific requirements based on a tailored use. I'll comment on that a little bit further. In terms of the tyres, where the rubber really hits the road in terms of interactions between the project and the community, I've broken this up into four main categories. that being tailings, waste, and these are key to community and state engagements, and obviously area potential conflict by what lithium byproducts, magnesium or calcium byproducts or waste. There's no one remediation process in place. Infrastructure, the remoteness and the market obviously has influences of such infrastructure. In terms of three main critical areas people are assessing. These being carbon emissions, land use changes, and any contamination. We've also seen recently the rise of calls for differential pricing, particularly in regards to nickel, around ESG type matters. And of course, there's then the services, in particular around water use and for the access to cheap power. And this also has implications for project-on-project risk assessment. Financing is the fuel that drives and lubricates the industry. Structuring of a financial outcome is important. It may represent a potential constraint to future development scenarios, so you have to get it right from the outset. As I mentioned a moment ago, funders are particularly interested in this aspect as well. They're trying to understand the risk-reward trade-off. They're also trying to understand how that is put together from the outset in light of a particularly poor track record of production, as well as their own internal ESG requirements from credit. Government are receptive to investments into critical minerals at the moment. And as such, there are several financial options that are available, which aren't particularly available to other traditional markets. And these would include measures under the Inflation Reduction Act and other green loans, bonds, tax breaks, and other incentives. But please remember that no financing agreements are ever binding until customer specifications have been met. In line, I'm going to skip up is a key aspect both to the Formula One industry, as well as obviously critical minerals and the search for them. Conditions. Just as track conditions impact operating strategy and race outcomes, economic and regulatory conditions in the delivery of critical minerals. This has led to a high degree of political jousting amongst nations and proponents. The themes are often interwoven between, but they include nationalism, export restrictions, particularly lithium, bauxite, as well as economic coercion, with a specific aim of moving up the value. As we've seen over the past months, there have been potentials in the roads with respect to both demand and pricing for electric vehicles and for renewable energy sources. Another one that I'm going to skip over, but I'm happy to talk to you further about a competitive spirit, key in industries such as Formula One, but also in critical minerals. In terms of both industries, where there's lots of money, there's power, politics, innovation, and glitz. It means that there's plenty of actors and critics that are on the sidelines, commenting and providing input as to how projects should be developed. SRK is often in a unique position in this regard, in that we are often entitled to take under the hood, acting as in terms of due diligence or reviews. That we've been asked to look at. SRK is really well qualified in this regard, having completed over 30,000 projects over a 4-year time frame. We have over 7,000 technical consultants operating out of 40 offices and 20 countries and 6 continents. We cover the full mining and across a range. As we've heard from a number of speakers today, there are 2 opposing themes. One is the overall permit approval process, which I think we all agree is taking far too long, at plus 15 years, and needs to be brought down if we are to meet the supply challenge for critical minerals going forward. To the counterpoint, as a reviewer of projects and the proponents timelines that have been put forward, we would often argue that these are very aggressive and they require a degree of skepticism and reality check in the West to be involved, as well as academia. We find that mining is really good at scale, but we're not particularly good at unlocking complex ore bodies, nor are we particularly good at social and environmental complexities, particularly those required in order to support the energy transition or to engage with stakeholders. From an Australian perspective, we are typically pretty good at hard rock type deposits, but we have, with limited exposure to other deposit styles such as clays and brines and other extraction techniques such as SASKF and in situ leach. We need new skill sets to hand. This goes to the competence of our consultants and those that are reviewing projects worldwide. In order to tackle this, we rely on our colleagues, or SASK relies on its colleagues outside of Australia, particularly those out of North and South America, Europe, to assist in some of the regards to these more, or to these we're seeing in Australia. Increasingly, we're all seeing a challenging and competitive market, with skills arising from the older generation, grey-haired, with a reluctance from the younger generations to take up the challenge. That's obviously having an impact on critical minerals going forward and our ability to deliver. As I mentioned earlier, minerals markets are different to traditional restrictors. To look at but also the waste mid early. It's one akin to the industrial rather than towards the traditional classifications and work back through the mineral chain, through the ore reserves to the resource. There's too much on the grade versus fine value relation and less to the refined process also earlier. In particular, financiers wanted that there is a commercially proven opportunity which requires pre-qualification and pilot testing along the way. Staging of the risk assessment in order to demonstrate to financiers that this is a viable opportunity for them. They're also wanting to understand some of the mitigants to project overruns and ramp up issues. They're wanting to understand project on project risk, such as for nickel projects, such as coal providing energy to some of the nickel developers. As there's no standardised products, there's no rules of thumb. And strategic alignment is also a key, particularly in terms of offtake partners, investors and other supply chains. ESG is also another important risk assessment and scrutinised by investors, financiers and regulators. It's important to ensure that on-ground practices don't contravene or publicly accept numerous standards. In fact, there's more than 90 ESG standards that apply to mining. We are seeing, however, improvement led by reputational risk, ESG ratings and financial in the form of withdrawal of investment, leading to change in the industry. The data supporting it can be accumulated as part of the action project or at minimal cost thereafter. However, do note that in general, once the project has reached a peak, we're moving from identification more to mitigation of risks. And that requires collaboration not only with scientists, but also with specialists in the space. In summary, the mineral space is highly competitive, dynamic environment, characterised by technical project and market risks. Some of the key focus areas that developers and explorers can work on is around investing in high-quality people, demonstrating a path for production by staging of risk and understanding here in Singapore. Thank you.
That's great. I was trying to figure out how to show you. Have you seen Pierre Gasly's performance as a one driver with France? Have you seen him do the reaction thing yet? There's him doing a reaction against a NBA player in America. If you can get it up just for a bit of light entertainment later on, I think you'll enjoy it. But his reactions are so quick, and it bears, to what you were saying to us there in that talk. They are quick. They have to. On my stage now, we are putting some shit up here, which means we're having a panel. We talked about decarbonisation. Now I have the uranium crew, the yellow cake heads, joining us on set, and instructed today by a fairly sensitive human being. We've got Guy, partner at Tribeca, and Guy, I'll let you, including Murray Hall et al. Andrew Ferrier did say that he was. Now, weren't you having a nice little intimate fireside chat this time with us last year? You were. Just you and someone else in a pretend fireplace. Beautiful. This year you had some information. We've given you more. Welcome everyone, and let's hear what's happening with uranium.
Thanks everybody, it's good to be back. I could sit here for 25 minutes and just talk without these three. But I think we should probably get them up. So Murray, Stacey and Andrew, if you'd like to join me up here, it'd be wonderful. Thank you. For those of you who were here last year, obviously we ran some uranium panels and fireside chats. The price of uranium last year was about $50 this time of last year, and in 12 months we topped in $6 a few weeks ago, and we're trading in the low 90s now. So a lot has happened in 12 months. Here to unravel that, we get onto the wonderful posts here. I just thought a bit of an update. Nuclear energy has been around since the 1960s. It's not new technology. Nuclear energy currently produces 10% of the world's electricity, and it's responsible for about 30 to 40% of the organisation bird electricity. Decarbonisation involves electrification. Don't decarbonise the electricity grid and actually solve the problem. You've just moved emissions from the city to the coal-fired power plant. Nuclear power is the only source of current technology of base load electricity that can deliver 24/7 electricity with low or zero carbon impact. So we're not competing with a better base load. What I'm going to do is, this is the one chance to pitch on your companies. Start here with Stacey. Why is it nuclear the bright, and what part is going to play in that bright nuclear
future, particularly because governments and industries are recognised as science rather than the false idea traded in the past? Or a pretty remarkable thing last year at the COP28 event where over 20 countries signed a declaration to triple nuclear capacity by 2050. I believe that grown the biggest endorsement yet of the role that nuclear energy will play in the transition away from fossil fuels. And that has also highlighted to governments and industries that there needs to be strong diversification of Western supply, as we've grown far too reliant on Eastern sources of supply, and that's where next-gen energy steps in. We are a Canadian uranium and exploration and development company. We are triple listed on the TSX, NYSE and ASX, and our flagship asset is the Arrow deposit at our Rook 1 project. Arrow is located in the tier sovereign location of Saskatchewan, and once in production will be £1 million of uranium, mine life of 10 years. And that 50% of global Western supply up to 25% of global supply.
Thanks, Stacey. And if we put that into perspective, that supply that's coming from this asset, and there's no doubt it's a world-class asset, we've got a supply deficit because Japan and Germany turned nuclear power. The rest nuclear electricity, 420 acres around the world. On the flip side, at the mining end of the equation, the capital's dried up overnight, and we've had more than a decade of underinvestment. We're now in the biggest reactor build program we've seen in decades, with 62 reactors being built, which is the most number of reactors since the 1970s, when France and the United States were building like crazy. When NextGen brings that deposit to market, the pounds coming out of that deposit will fulfill the 62 reactors being built now. So perspective, we've got a 50 to 60 million pound deficit already. The 25 to 26 odd million pounds a year coming out of that asset are going to for the future build. So we've got a really big deficit that NextGen can't solve on its own. Andrew, same question for you. Bright nuclear future, how does global uranium and enrichment that?
Yeah, thank you. Look, I think power, and that is, the science. So nuclear, a huge part, a little bit different moving forward, obviously with the introduction of small modular reactors, and that's going to play a big role in terms of, I guess, generally how people think about nuclear in terms of these small modules becoming, readily available over the next 3 to 5 years, and really changing how they fit into the power supply dynamics of these countries are looking for. And as Guy said, I'm the MD of Global Uranium. We're an ASX listed company. Where we fit in really is we have development projects in the US, the next wave of development projects that's looking to fill that massive supply deficit that Guy spoke about. There's just been a fundamentally uninvested in industry for the last 10 years. We've also invested into the enrichment space, which isn't discussed a lot, but it's really important to the nuclear fuel side. And we talk about yellow cake supply, uranium world, it just haven't been invested in over the last, for a very long period, and they've become very reliant on uranium. That's
And Simon.
Last but not least, Guy.
Last but not least. Saving the best for last, perhaps?
Absolutely. We're got assets, Elevate Uranium got assets in Namibia and Australia for producing jurisdictions for uranium in the world. We, unlike some of our peers, have gone and discovered, NextGen have discovered, but our peers in Namibia all bought assets. We've gone and discovered our recent ones. We've got the largest land position with nuclear fuels in Namibia, a great jurisdiction in which we have 3 mines, uranium mines developed in the last 18 years, 2 mining licenses granted last December. So a very active industry in Namibia, and we've got the largest land position, made 4 discoveries in 4 years. The first one of those discoveries was this project, 48 million pound. We announced last November about another update on the resource a couple of weeks. So we're a little bit behind years because we've gone and discovered. We've had our resources, but certainly the thing we do is shallow. We've come up with the initiation process, so that adds significant value. So we can reduce the mass to be leached to less than 5%. So that's akin to a base metal operation where you can transport that concentrate site for value add, or you can value add on site. So that's the optionality play that we have in Namibia, in particular, and it's a good asset for it to have both, shallow mineralisation in Namibia, exploration success, and our upgrade process.
Okay, so I guess this is a chance for my little pitch. So we, Tribeca, have looked at this space on and off for a number of years. We delved into it about years ago. We launched the Tribeca Nuclear Opportunities Fund 6 years ago. As I said, the price is $20 in, it's moved to 650% net of fees since inception. And people said the price has got to 100, surely there's a wave of supply. What we find with uranium, it's, unlike other commodities where high prices have solved some supply, there's a very complex issues that go on with your projects. We're lucky enough to have the 3 panellists here who all have asset jurisdictions. So we're just going to focus a little bit on jurisdiction because it's, again, it's falling off. It's something new. Canada, uranium jurisdiction, lots of potential high-grade uranium, but still the jurisdiction's not easy. Can you give us a little bit of elaboration on Canada and how that's...
Yes, so Canada, obviously, it's a great sovereign location, stable political environment, stable regulatory framework with regards to lead tax and mining infrastructure, tier 1 processing and production capabilities. But when it comes to uranium, it has been over 20 years the project has done it. The permit process still needs a little efficiency, but we're working that as we go along. So yeah, it's tricky when it comes to permitting a uranium mine in Canada, but we are, the government is working to expedite that process. And governments and industries will need to work closely together to speed that up.
And just so Murray doesn't get upset he's last again, we'll go to Murray. So Murray's got projects in Africa and in Australia. Again, two of the other uranium jurisdictions. Africa, not every country is equal, and the same to be said about Australia.
Countries, and Namibia and Botswana. Permitting, I mean, you talk about in Canada, just had 2 mining licenses in December. 3 uranium in the last 18 years, so 3 of it. It's the only country indicated uranium association, great conduit between explorers, producers and government. Access to the government minister. We have direct jurisdiction to be in, and you talk about like during the last sort of loose cycle, you know, what Athabasca Basin went into care and maintenance. They got very high grades, and you could argue they preserved their high grades, but the longest continuously running uranium mine in the world is a Rossing uranium mine.
Yeah.
Commissioned in 1976, right, in Namibia, 48 years of continuous operation. That's 2 generations of people familiar with uranium mining, less woke. I know you like that word, less woke over there, and certainly, you know, there's a history of uranium, so it's not a real obstacle for us. A lot of those mines are inside national parks. If you're in a national park in Australia or Canada, you're probably kicked out of the country. 75% of Namibia's revenue comes from inside national parks, so that's also not good for us. So it's a great journey, and the low grade to be able to develop and continuously operating for a long period.
Then you just want to quickly touch on Australia as well. I mean,
yeah, we do want to touch on Australia, but just very briefly. So I come from Western Australia, and unfortunately we've got a state government that's got their head in the sand and think that uranium's an evil thing. Probably, I think the Skyhawks wrote that movie, that song, the horror movie back in the, when you were a young guy, you know, it was all about the 6 o'clock news. It's a horror movie, and I think it's uranium's badly publicised, nuclear's badly publicised. They jump on any negativity, and that's what they've done. So they've scared a lot of Aussies. They're all woke now. You know, we're Northern Territory. We're looking, we want to give you some grants to do some drilling too, and the Northern Territory is a good one to be.
And Andrew, United States of America, about the Department of Energy being thrown hand over fist. The United States government seems that the market should solve the mining issue. That helpful around, you know, not in my backyard. Just talk briefly about the United States as a jurisdiction, given they want such a big nuclear power again.
Yeah, absolutely. So again, you shouldn't generalize about the states. The United States is obviously a big country. The projects we have are in Colorado and Utah, and we've had a lot of success. We now, and what we've required to do on the permitting front over the last 6 to 12 months. I think that's got a lot to do with the people in our team who have previously permitted uranium mines in the US over the last 10 years. So we've got a wealth of experience for a very small team. Colorado and Utah are good places to be. Wyoming, Texas obviously can do well. You see Peninsula, you see Core, they've made a lot of success and they're bringing mines into production as we speak. So we're very conscious of when we're looking at new projects. And even the state, it's like where in the state matters. Is it private land? Is it private minerals? There's a lot of things to go into what makes a project easy or difficult to. In terms of what they see throwing huge amount of money into the enrichment space, that sees the huge value being at this point in time. This morning that just recently $1 billion of funding, domestic capabilities on enrichment, right? They are banning Russian uranium. That is very close to being passed in landing to get across the line. That will have flow-on effects though. It will definitely have flow-on effects. They're not checks, the uranium miners have done some things in terms of purchase. We've got domestic convertible step is source.
And I'm just going to stay with you. You know, the United States, when you look at the Athabasca Basin, there's high-grade, large deposit. When you look at Africa, they're not as high-grade, but easier, easier to mine. Projects have a lot of smaller projects. Obviously, ISR doesn't invest. What do we need to see in consolidation? I mean, what conversations happen there to make companies like yourself more relevant to be able to, stand up and say we've got more pounds to deliver to the market?
Yeah, for sure. I think, look, you think about the US, it's still got more nuclear reactors than any other country. It's 20% of their power. That's the biggest economy in the world. 20% is a big number. They need around 50 million pounds of uranium every year, right? That's a lot of ISR projects, right? So they're going to be looking at big projects coming into the market to fill this. We have projects in the US. The US until roughly 1980 was all a big producer of uranium. The 3 Mile incident occurred. So they need projects of scale. Supplies deficit. They're also north of the border as well to Australia, and they'll definitely look in. What they're going to want is people. They want to back certain people, certain teams, projects of scale with management teams that know what they're doing. And I think that will play out over the sort of next 6 years.
So, high-grade Athabasca, lower-grade Africa, bulk moving operations from Murray and Stacey here, both have challenges. The higher grade, the harder it is to, the human element, obviously. You don't want human beings in contact with big high ore deposits. Africa, the lower grade, you've got to convince the market that you're able to, move that material. How do you respond to those sort of questions when investors say, well, I don't want to be in low-grade Africa or how do you that? I mean, obviously here with the challenges of high grade, how do NextGen look at that?
We like to focus on our geotechnical setting and stress that our uranium is located in an extremely competent basement. And because it's in that competent, unconsolidated sandstone, a lot of other uranium deposits are, we have an easier method extraction, and we use such as long hole stoping. Further, because we're located in that competent basement rock, we also can you have quite clean metallurgy because there's been very little water ingress going through the ore body over millions of years. So we tend to focus on our geotechnical setting and our low costs and stress that as a feature of the Yarra deposit.
And Murray?
Mate,
front end?
The copies resource, 95% of the ore is 15 metres of surface.
Yep.
That's a surface miner. That's an easy exploration program and mining program. It's not complicated. So the challenges for us really are sort of the large area. We've got a strike length of 20 kilometres face, but metres deep. I mean, that's I said, where's your shovel? Exploration efforts, $1,000 a hole, right? but you can't do that in the Athabasca. You know, we can get over a lot of exploration, cover a large area. So that's the only limit.
Okay, so we're rapidly running out, so I think I'm going to talk about the nuclear side as well as just the... I don't need to react well, no, through the break. Look at it, you don't want a coffee or tea, do you? I don't need small modular advanced nuclear in my models to see a deficit out to 2030. However, there's becoming more conversation. We'll start with Canada. I mean, OPG are starting to build a BWRX 300 on an existing nuclear site, of course, which gives them a lot more latitude. Is Canada going to win the race to be ex-China, the first small modular reactor, advanced nuclear?
Yeah, they certainly want to. So on that topic of those reactors, they're working with GE Hitachi to deploy 3 of those modular reactors, and they're working on the legal and regulatory to deploy them, accelerate deployment. So certainly they want to be the leading nuclear technology.
Fuel cycle, you've talked about that innovation to change those fuel cycle and...
Yeah, I think they're fundamental. Start talking about small modular reactors. So in enrichment, done through centrifuge, it enriches the fire after about 3 to 5, and that's what goes into conventional nuclear power plants that most people are aware of. It produces obviously power and electricity. Small modular reactors, in most of the examples, require enriched uranium material, so that 19% level. That also requires a lot more enrichment. So there's, you know, we've invested in an enrichment company called Uranium, which has a chemical enrichment technology. It's being developed in Australia as we speak. It's fascinating in terms of how it could be applied and plugged in potentially around the existing enrichment plant, help it, you know, and that's going to play out. There's going to have to be a lot of money spent.
Is it going to be, or is it going to be miners that bring small modular reactors or micro reactors to market first? Who's going to win that race? Will BHP put a micro reactor in, or is NVIDIA going to solve their electricity problem?
From what I heard earlier, I don't think they're worried about worried about energy. So it's going to have to be the mining industry or the nuclear industry that bring it forward. It's not going to be the AI pushing forward. That's one of the lesser worries that they've got, if I heard that conversation correct. So yeah, I think it's going to have to be the industry pushing ahead.
And on the basis that we're all here next year, and I know you guys hate being put on the spot price, next 12 months, where does it top out? It's been from, I'm on the record of saying $100 a pound.
I just want to, can I go to 150? Ask me why it's not 150. Oh, that was you, wasn't it? Yeah, look, I'm 150.
150?
Yep.
Okay, Stacey?
I agree with 75.
All right, there we go. It looks like it's onwards, upwards, but we're all invested in the sector, so don't necessarily take our word for it. Thank you very much for being here today this year. And I think it's great. I think there's almost a dozen uranium companies here this conference, and a lot of them are next door. So please go and make yourself known to them and ask them any questions, because they've